If every company pulls a Saylor and goes balls deep in Bitcoin, what does that look like for equity markets? So I got to thinking, who's the best person to host this panel? And they're still swapping microphones out the back there. No, Preston's ready. That's great. So Preston Pysh, who's done incredible work with his own podcast, educating as many people as he possibly can, he's going to host this panel. And who better to have on the panel Lynn Alden, who has just launched her book, Broken Money. Lynn, give it up. Thank you. Yes. Well done, Lynn. Europe loves you, Lynn. And we wanted to get, he won't mind me saying this, will you, Larry? We wanted to get an old-timer in here, talking about gold, maybe, and his old days, and where he sees the future of this, because watching Larry's work over the last few years has been incredibly inspiring. He's been doing great work for the older generation and the younger generation. Larry Lepard, please. And of course, I've already introduced him once on the stage today, and I know a lot of you apparently have been sharing the video of the chant of Saylor, Saylor. So that's great engagement for the Bitcoin Atlantis crew. And Michael, please come out again for the last panel. Preston, these guys are in your hands.
Let's do it. All right. So I have a personal question I've got to ask to Michael, and I think everybody up here wants to hear this question. So when you first came into Bitcoin in 2020, and we are going to get to the future of Bitcoin, but this very first question I have to ask. When you came to Bitcoin in 2020, I'm sure you had some fiat whales that you talked with, and you had conversations about why you were buying Bitcoin. I'm curious what the difference or the delta is to those same conversations with some of the people are, and obviously you don't have to name names, but like what has that been like in the past 4 years, and what are those conversations sounding like right now?
I had a lot of conversations in the fourth quarter of 2020 where people would ask me what we did and why we did it. And some of them went on to buy Bitcoin. Many of them bought Bitcoin and then they sold it when the market crashed and they disappeared. And then I would see them again and they say, yeah, I guess I shouldn't have done that. And then I had, then I think probably, you know, the number of people interested has been building steadily since the beginning of 2023. Right, 2022 was a difficult year where you just had to explain the crypto crash. But I think every single quarter since 2023, the number of inquiries and conversations have built and they've become more constructive. And I think the difference today is now you start to see a lot of big names like Citadel and BlackRock and Fidelity and the like that own stock in my company or they're into Bitcoin. And so I think my status as an institutional spokesperson of Bitcoin is dwindling, and now that torch is being carried by the analysts at Fidelity or BlackRock or Bitwise or ARK or many of the other ETFs, and I'm happy to see that.
Yeah. Lynn and Larry, any further? I mean, you guys talked to some heavy hitters. What are you guys seeing?
I definitely think we've seen a shift in the Overton window of, you know, back then Bitcoin was still viewed as very niche, very weird. A lot of assets soared in the second half of 2020, and a lot of people just, when they looked at Bitcoin, they were like, oh, that's just a liquidity thing. It's just, you know, it's this flash in the pan. Whereas I think, and this is something I stress a lot, you know, most people here have probably seen the logarithmic price chart of Bitcoin. It's a very common thing you'll see on Bitcoin Twitter, you'll see everywhere else. You see all the highs and the lows. Most people in the world have not seen that chart, right? So that's in our echo chamber, that's a very common chart to see the long-term price of Bitcoin, especially in log terms. You can see all the higher highs, higher lows. Most people have not seen that, and instead they only see the cycles that they personally witnessed. They usually look at the linear chart, and it either, at any given time, either looks like an insane bubble or it looks like a broken bubble. And that's how most of the people see it. And so they don't really see those older cycles generally. So at this point, they might have seen the 2017 cycle, they might have seen the 2020 bull market cycle. And for them, there's really only been those two cycles. They know Bitcoin's older than that, but they don't really see the price chart in their mind. And I think what catches people is when there's another high and another higher low and another higher high and another higher low, every single one of those is like another point to them that Bitcoin didn't die. And so they don't see like the 4+ cycles. They see, 2 or 3. And the third one I think is pretty important. When you see something not die 3 times, that's hard to really ignore. And so I think that at the institutional level, we're having some discussions with institutions, and those go, I think, a lot smoother than they did a handful of years ago.
Larry?
First of all, let me just say, somebody pinched me. I mean, it's like I'm a club payer for Bedford, and they say, let's go scrimmage with Messi and Ronaldo. I'm like, what the fuck am I doing here? Yeah, I'm just an old fart gold guy. And I view my role in this whole thing as converting gold guys into Bitcoin, because they get half the problem. They understand the monetary debasement issue. They just got the wrong tool, as Michael says. And thank God Bitcoin came along and gave us a much stronger and better weapon, which I've increasingly embraced. And of course, now I'm a full-fledged maxi and out of gold, or getting out of gold. But I've seen in my base probably 50-50 conversion. Some people are just too dyed-in-the-wool, can't get over the physicality issue, don't understand the future, don't want to take the time, don't want to do the work. But I've seen others who've completely flipped. Notable one recently was Chris Irons of Quote the Raven, who was a very smart guy and understood the debasement issue, but was anti-Bitcoin because he hadn't done the work. And I just kept working on him and working on him and working on him to do the work, and now he's a raving maximalist. It's really fabulous. So it goes both ways. Some guys get converted and some don't. And but we just got to keep chipping away. I think Michael's point from his brilliant speech earlier of it's incumbent upon all of us to spread the word, because this is the solution to all our problems.
So if we're looking at Bitcoin time now and a little bit of the past there, and we've defined kind of where we're at, and we look to the next 6 months to a year, I think everybody in this audience is looking at the number of coins that are getting gobbled up on a daily basis, and they're then looking at the supply suffocation that they know has happened over the last year and a half. Everybody on CNBC wants to talk about all the coins that are being bought, but what they're rarely talking about is the amount of coins that the crazy Bitcoin people soaked out of the market for the last year and a half, and how scarce it is, with 70% of the coins not moving in more than a year. And so when we look at that, and we're looking at, and we understand what that means, 10,000 Bitcoin are getting soaked up just on ETFs alone, and there's 900, soon to be 450 being issued per day. I'm looking at that and I'm saying, this price is going to move out so aggressively. What has not been built that I don't know, worries you is the right word, but what is the thing that you think needs to be built or engineered, or infrastructure that needs to be in place in this coming year that maybe isn't built? And that's to anybody.
I think that basically pain points reveal themselves in each cycle, and things get built kind of in response to problems. So it's one thing to kind of look forward and see what problems are going to exist, and there's always people trying to do that, but it's not really until they need the solution do they turn to it. So for example, when there's low fees in the main chain, people don't really look at other layers that much. But then when there's high fees on the main chain, suddenly those layers matter to them, and suddenly there's more people willing to build layers because there's kind of a more clear demand for it. So I think that we're going to see a number of pain points along the way, probably fees being one of the notable ones during manias, or during people putting other things on the chain, all sorts of reasons. I think that's kind of one of the things that there's going to be that shortage, and there's going to be a response to it. And to your point, I think that the HODL wave, like the 70% of coins you said haven't moved in a year, that's arguably as big of an effect as the halving that has in every cycle. So for people that aren't familiar with it, during a raging bull market in Bitcoin, generally you see some of those older coins that haven't moved in a while start to come to market. People are up 5x or 10x or more on their investment. some people trim their position, or they want to buy a house and they need a down payment. There's money that starts getting sold as the price goes up, and eventually that exhausts the new demand that's coming in for the cycle, in addition to all the other meme coins and everything else that's kind of soaking up excess demand. But then during the bear market, a lot of the fast money gets out, and over the year or 2 or 3 years, more and more of those coins gravitate into hands that are really not going to sell anytime soon. They're either in MicroStrategy where they're never going to be sold, or they're like in various people that are holding for 5 years or 10 years. They don't plan on selling anytime soon, and then it only takes a very small spark of new demand to come into that wall of just not going to sell, and that's what we're seeing now. That a fairly still modest amount of new capital is coming into the space, but so many of those coins have already rotated to the diamond hands and away from the fast money. And so I think that's still a cycle we probably have another 12, 24 months of going through.
I don't think anything has to happen this year in particular. It's already happened. But I do think if we're talking about the future of Bitcoin, I think that we're in the Bitcoin gold rush era. And it started in January of 2024, and it will run till about November of 2034. It's a 10-year. And the reason how many people know what happened in November of 2034? It's an important date, If you pull Clark Moody's dashboard, you'll see that. In November of 2034, 99% of all the Bitcoin will have been mined. And the last 1% comes out over the next 100 years. So for all practical purposes, stock to flow becomes irrelevant. The stock to flow ratio of Bitcoin is infinity in 2034. It's within the tolerance of just random hourly trading of the asset. So it becomes noise. And so you have about 42 quarters, somewhere between 40 and 42 quarters. And if you look at that 40-quarter period, at the beginning of the gold rush, no bank could custody Bitcoin, no institutional investor could buy Bitcoin, no Wall Street trading firm, no investment company could handle Bitcoin, and it was unclear whether that ever would happen. That was a binary. And when those spot ETFs were approved, that created a fire or an avalanche. The genie's out of the bottle. It doesn't matter who's elected president next. It doesn't matter who's the next head of the SEC. It doesn't matter. And no politician's opinion, no banker opinion, no regulator opinion matters after that date. That was the most consequential thing that kicked off the gold rush. Now, as of the first quarter of this year, which is we're in now, right? February 29th, March 1st. What's the date?
March
I
1st.
get my dates messed up in leap years because everything's off by a day. But every single institutional investor would have looked at this and said, Bitcoin interesting, but I can't buy it. Everybody. And so you have 99% of the money in the world that has been unable to buy and so unwilling to consider things. Institutional investors are like this. They could watch your company and have a million opinions but don't really care. And you could go to them on a Tuesday morning and say, do you want to buy $50 million worth of this security? And they'll then look at it and they'll give you an answer by 4 p.m. So when they can buy via their bank, their institutional wirehouse, their prime broker, they will make a $50 million decision in 1 hour. And they will watch you and cheer for you or laugh at you for 20 years when they can't buy. So we flipped a switch in January. What you've got is 40 quarters of people getting educated, and here's what happens next. All those ETFs, they're only distributed through 20% of the distribution channel right now. They're maybe even 10%. So that distribution is going to go from 10% to 20 to 40 to 60 to 80. And there'll be a point at which all the investors can buy. And, I had to fill out, you have to fill out 3 waivers from 3 different accounts, as of a few weeks ago. So you're going to see resistance drop. You're going to see all the major banks add support. Then the next question is, well, is it creditworthy? Can I borrow against the asset? No major bank in the world will give you a loan against those ETFs yet. They've all got clocks that are running after 30 days, after 90 days, after 6 months, after a year. So first they let you buy it, then they loan you money against it. None of those instruments can you trade options on. You can't buy or sell puts and calls on a spot ETF. That'll be a year. So what you're going to see is it'll take years for the distribution to open up, for the credit capillaries to work, for the volatility trading to kick in, for the hedging to kick in. Then you'll actually see all the big banks that don't like Bitcoin getting pressured. Like now we have to custody it because our biggest customer wants us to. So right now you can't custody, but there's a big battle afoot on Capitol Hill. That battle will take place. Bitcoin will win that battle. Then you'll see banks custody, then you'll see 1, then you'll see 10, then you'll see 100, then you'll see 1,000. And likewise, there's famous analysts. You can name the analysts that cover Bitcoin today. Len Alden, Chris Kuiper, right? Yassine, right? There'll be a day when there'll be 200. You won't be able to name them all, right? There'll be a day when Bitcoin ETFs have already blasted past gold, and then Bitcoin ETFs trade more than the S&P index ETFs. And there'll be a day, I believe, when Bitcoin ETFs will have more capital than SPY or the S&P index. And on that day, the people at Vanguard will say, oops, I guess all the money just shifted out of equity. But that day won't come tomorrow. It'll take many, many quarters. And by the time we get to 2034, I think you can say the high growth institutional adoption phase of Bitcoin has now moved to just the growth phase.
Let me, Preston, I think that the quick answer to your question is better layer 2. I mean, Lightning needs to get a whole lot better, a whole lot faster, and I think it will. But let me give you a little bit longer answer to the question if you indulge me. In the early 80s, I started my business career. The IBM PC was introduced in 1980, and Microsoft came public in 1986. Came public at 14 times trailing, and it's growing 40% a year. And at the time, if you were in the computer business, you were at IBM or Prime or DEC or Wang. And the mini computer was really the thing, and a lot of people regarded these PCs as toys. And I think it's an interesting analogy that back at that point in time, software was regarded as risky because it was ones and zeros, and people didn't see that there could be any value in it. They were saying, how can there be value in the software? It's just written, it's code. It has no value. The values in the disk drives, the values at IBM, the values in these hardware computers, people who are making real stuff. Sounds kind of familiar, right? And I recall, go a little further back, wind it back, I'm at business school, and I'm with my business school roommate. He's with his roommate from Harvard College, a guy named Steve Ballmer. We're walking along the Charles River, and Ballmer says, we've got this thing called DOS, and the entire world is going to need this thing. The entire world. Everybody is going to have it. It's going to be a part of everybody's life. This is going to be a multi-billion-dollar corporation. I looked at him, I thought he was nuts. But then it kind of hit me, he wasn't nuts. It was the base layer of the technology that allowed the PC to grow. And 40 years later, it is ubiquitous, and Ballmer's obviously a billionaire, and Microsoft's a multi-billion-dollar company. I mean, I bought it at the time in 86 when it came public, sold it 3 years later to buy a condo. It was a mistake. The split adjusted price is 6 cents, and the stock trades at, $290 today. So it was, 47,000 times your money, or 4,700 times your money. The point I'm trying to make is that Bitcoin is the same thing, and people don't understand it. They don't understand that it is the base layer of money, and it is going to absorb the entire monetary system given a long enough time frame, at least in my opinion.
Hey, Larry, I got a question for you. Microsoft comes public 86?
Yes.
How many years after Microsoft came public did it take before investors thought investing in Microsoft was a conventional a conventional
It's a good
investment?
question. I would say my memory was it really started to get going in the mid-'90s, maybe in late '90s, and probably
10 years?
At least 10 years, yeah.
10 years.
At least 10. And it just kind of got progressively better, as you know. We could go look at the Stark chart and see the curve, right?
But for 10 years, it was risky. And
Oh, absolutely.
you know what's
Absolutely.
funny, what you just said, though, which is you bought it and then you sold it after you made
Yeah.
some money. And so many people will do the same thing with Bitcoin.
Exactly.
In fact, they have said it, but you'll see in a generation of institutional investors, they'll buy Bitcoin because it's going up, and then they'll sell it after they've made triple profit to take some money off the table. And then 10 years,
Right.
in 2035,
Right.
they'll look and they'll understand it much better. And then
Right.
they'll think, like the way people think about Microsoft and Apple today, which is you just never sell them, you just own them forever.
Right.
Yeah.
Yeah.
And by 2035, they'll probably say, now I think I'll just own it.
Right.
And Kramer,
Right.
if he's still working
From
CNBC,
Seinfeld, right?
If he's still working on CNBC, he'll be saying, yeah, Bitcoin, you just own it, you don't trade it.
At which point it will be a sell.
We'll win him over.
And I think one thing that gets lost in the conversation is that institutions are made of people. We often describe, there's people and then there's institutions. They're often described as separate buckets. But institutions, of course, are just made of a lot of people in an organized way. And what you generally find when you talk to people at institutions is there's a lot of people in institutions that do get it. A lot of them own Bitcoin personally, even up to the CEO level sometimes. But it's just that it's not gotten to the point where they could bring it or integrate it into their institution yet. They couldn't put it on their big balance sheet. They couldn't put it on their corporate balance sheet, their pension balance sheet, their asset allocation plan. Even though they themselves are like, oh yeah, I own Bitcoin. I just can't give it to my clients yet, or I can't put it on the corporate treasury. And as the asset goes through more positive cycles, as there's more kind of milestones being met, they can start bringing that from their personal account and start actually doing some of the same actions that they've already done personally, just in their institution, in the more professional life, because the asset's gotten large enough, liquid enough, just understood enough that they can bring it to their peers.
And everybody inside that institution knows who that person is because they just talk about Bitcoin all day long, right? All right, so we covered 24. That was the answer you got for 2024. Now we're going to go to 2025. When you were talking about collateralized lending, Michael, I look back, Mt. Gox, absolutely devastating for folks that had deposits on Mt. Gox. This last cycle, we had FTX and many others that were doing lending, right? If you could, because there's going to be big bankers, call it BlackRock, Fidelity, whoever, that maybe are listening to this conversation. If you could give them a bit of advice about how Bitcoin works, and they're going to be doing lending with Bitcoin, what would be your bit of advice to them right now?
I don't think they'll have any problem lending against Bitcoin because they've already got... The problem with these other examples is they're all wildcat banks. I mean, people are going to nobody in their right mind would put money in a private, opaque, unaudited operation run by two dudes out of their garage offshore without a mailing address, right? And so the problem wasn't borrowing against Bitcoin. The problem was actually dealing with, people running personal banks out of their basement, and they didn't know how to run a bank. The way all these wirehouses work right now is you have a portfolio of assets, they mark them to market every day, and they give you margin loans with loan to value no more than 50% or something, and actually they will adjust the advance ratio. And the way they manage risk is they just mark them to market. They already know how to mark to market. With Bitcoin, they'll just be able to mark to market 24/7, 365. And normally the way they work is they would say, well, we'll give you a loan of X. If your portfolio is Apple stock and Microsoft and Bitcoin, they'll give you a loan of up to 20, 30% of that. And then if those things trade down, they'll just ask you to post more collateral, pay off the loan. And That's a business that works perfectly fine for the last 40 years. All their systems are wired. And the risk here is the people that got screwed in the Bitcoin loans, they didn't get screwed because the Bitcoin collateral went bad. They got screwed because the bank stole their money, right? And so here you have JP Morgan, Citigroup, Bank of America, Wells Fargo with trillion-dollar balance sheet. They don't normally steal their clients' money as a normal thing, right? They're too big to fail. And so I think that, I mean, anybody wanting a mortgage or wanting a credit card or a home loan, they would normally go to a mega bank anyway. And the problem in the market is those banks haven't custodied Bitcoin, and because they don't custody it, it's not part of the collateral package. And there are a lot of reasons why they haven't or they couldn't. But as soon as they can, I actually think the rest of the credit issues become very straightforward. And you'll find a bank will give you either that margin loan in lieu of Apple or Microsoft stock, or sometimes they'll give you a mortgage and they'll say post some other assets as security against the mortgage, and you end up posting some securities, and you get a 30-year mortgage with some securities posted to get it going, and they may just take Bitcoin as that security to top up your mortgage or refinance it.
So if I was going to push back on this, I think like if Caitlin Long was here, she would say there might be a frequency mismatch. So when we're looking at the speed of settlement of Bitcoin, and we look at the volatility of Bitcoin, and then we look at traditional rails, equity certificates, what's the frequency that they're able to, are they 24/7 that we can clear those? And if we're posting collateral with things that can't match Bitcoin's frequency, does that pose systemic risk for some of these custodians?
I don't think it's posed systemic risk. You're talking about 0.1% of the money. For example, a big bank would give you a $100 million loan against Apple stock over the weekend if you had $1 billion of Apple stock. If you had $300 million of Apple stock, they give you a $100 million loan. Over the weekend, maybe something happens in China, declares that Apple can't manufacture iPhones, and in the morning, Apple stock gaps down. Well, the bank took the risk, not you. And the bank's already willing to take 48-hour or 72-hour settlement risk on all these other securities. They would be taking an order of magnitude less risk with Bitcoin. So Bitcoin de-risks the bank, but the point really is the banks are already taking more risk, and they're comfortable with it. They've got massive balance sheets. They've got hundreds of billions of dollars of equity capital. So the point really is the only thing that's holding back Bitcoin credit markets is the big bulge bracket banks being able to custody Bitcoin. And at the point that they begin to custody Bitcoin, they will start to extend credit as the natural next step. And there's nothing about the asset class that makes it harder for them. It's a better asset for them to extend credit. It's better than the $100 trillion of equity. It's not worse. So I actually think they will embrace it, and their view would be a lot less risk. It's a lot easier to manage. The reason they're not doing it now is not because there's an issue with Bitcoin. It's just they're not able to custody it. And if they can't custody it, there's no handle on it. That's why you don't see that market taking off.
I think there's been good success, for example, companies like Unchained that have been around for quite a while doing Bitcoin collateralized loans. And you mentioned Caitlin. I think a key thing she would point out is the difference between commodity credit and circulation credit, as Mises described it, which is basically whether or not you can then take the capital, the collateral, and rehypothecate it. So in the ones that have been doing this successfully through multiple cycles, the key is that the collateral is safe. They're making low loan-to-value loans against collateral, and then they're holding the collateral safe rather than lending out the collateral and creating this like big rehypothecated monster that they can't deal with. And so the firms that have done that well, they've been little or no credit losses because it's done prudently. And I think we'll see large and larger institutions get into that over time because it's a loan type that makes sense amid the other loans that are out there.
Larry, you're good. Okay. Did you have something? Good. Okay. When I think about 2024, 2025, I think about all these people around the world that are dealing with just horrific currencies and unbanked and the payments side of the house. How do you guys see that playing out in the coming 2 to 4 years with what's currently built, where Lightning's at, some of the technologies that are on the horizon? How do you see the order of technology, I guess, manifesting itself in the coming 2 to 4 years?
I think there's 1,000 different on-ramps. I mean, it's not one. Lightning is an important layer too, but there's a different Bitcoin wallet in every, there's a dozen Bitcoin wallets in every country. There's a dozen Bitcoin exchanges. There's peer-to-peer. It's a different story in every country in Africa, a different story in every country in Asia. It's going to be an evolving story, and you're going to see people develop a lot of competitive layer twos. You're going to see people develop competitive layer 3 apps, competitive exchanges. Some people will be good, some companies will move fast, some will move slow. There'll be regulatory turmoil. There'll be I could have predicted, like in Argentina, I would have said, at some point, Argentina will close the door to Bitcoin before Javier was elected. Yeah. I would have thought that they're going to institute capital controls. And then that election turned everything 180 degrees, and it went the opposite way. So politics is chaos. And then you saw the opposite thing happening in Nigeria, where it was 400 naira to the dollar, and when it jumps to 1,200 naira to the dollar, they're closing the on-ramps. They're closing the on-ramps to the custodians, but non-custodial solutions become all the more compelling then, right? Yeah. So I don't think there's one answer. There's not even one best outcome or need in one country, because it's dynamically evolving based upon the politics and the circumstances in every single nation on the ground. It even changes by state, by province, right? So I just think this is classic market situation. The one thing that'll happen is all these currencies, as they weaken, there'll be marketing events for Bitcoin. Everyone in a collapsing currency is going to look for a solution. More and more are going to hear about Bitcoin. Then they're going to want to be paid in Bitcoin. Then they're going to want to download a Lightning wallet. And then there'll be another wallet. Then there'll be a debate about what to do with it. And then some companies will fail. Some will succeed. Some governments will ignore it. Some governments will embrace it. Some governments will, roll around in the mud with it.
Lynn?
So one thing I describe in my book, actually, there's 160 different currencies in the world. And if you look historically, how does money get in and out, right? Because they all have varying levels of capital controls, more or less, around them. And the two ways the money gets in or out are either through physical ports of entry, which are obviously very restricted. You can only bring so much cash or gold to an airport. And then wire transfers, which again are tightly controlled environments. And so when you have like a space with a failing currency and millions of people, historically the ways to get out were somewhat limited in terms of scale. And what things like Bitcoin and stablecoins do is, one, you can bring them through ports of entry with infinite value density, right? So it gets past that issue. And then two, if I hire a graphic designer in country XYZ, she can hold up a QR code over a video call, or she can send a payment string over email or DM, and I can pay her over that and go around her local banking system. And so there's obviously frictions there for those that are trying to maintain those kind of captive audiences in 100+ different currencies around the world. But what we've generally seen is countries try to kind of block the exits and realize it's not working. Like you mentioned Argentina, there was in 2022, they stopped, a lot of banks were going to get into Bitcoin, and the Argentinian government stopped them from doing it, the big banks. Then they actually, the next year, they extended it to the fintech companies, not even the banks, but the next layer. And they never got to the point where they said Bitcoin's illegal, but they were trying to make it harder and harder to do. Now some of that's being reversed. We also saw in Nigeria, they went through a phase where they blocked all the banks from sending to exchanges. Nigeria then developed the largest peer-to-peer market volumes in the world, according to most measurements, if you look at chain analysis. So basically, whenever there's a friction, if the people want it, the tool's so powerful that they can route around blockages. until the problem at the top is forced to change and modify their strategy. And so I think we're going to see more and more waves of that. We're going to see frictions, and then we're going to see overcoming frictions, and then we're going to see new frictions and overcoming frictions, because the market's just, the tool itself is so powerful that it just gives so many ways to route around problems when they emerge.
I agree with William. Just quickly, a reminder that one of the original strong Bitcoin use cases was the Chinese, wealthy Chinese, who had a lot of capital and could not get it out and couldn't put enough gold in their suitcase to leave, would convert into Bitcoin, fly to Vancouver, convert back to Canadian dollars, and buy a house on the water. And so, that the capital controls that are likely to come from oppressive regimes just drive adoption and use cases.
So let's go the next 4 to 8 years. Energy because it's infrastructure and takes a little bit more time. 4 to 8 years from now, how do you see energy production in Bitcoin? Like what is changing from what we're seeing today? Is anything changing from the trends that we're seeing today? Any insights in that area?
I think it's going to be more and more normal for Bitcoin to be used to soak up stranded energy. I think it'll become just increasingly normalized that if you have any sort of, for people that follow the grid, I mean, we turn the light on and it just works. We turn the light off, it goes off. But behind the scenes, it's actually very complex because you have fluctuating demand of power and you have fluctuating supply in some cases. Or you have a supply that's always online, it's always producing, like a hydro dam or something, and there's fluctuating demand around it. And so how do you manage that delta, that gap between both sine waves are kind of fluctuating against each other, demand and supply, and so you need a really flexible source. Either you do things like natural gas plants that can turn on in a second, or you need to just waste the energy. Like if you have always on hydro power and people aren't using it in the area, it just gets curtailed, it just gets wasted. And so Bitcoin represents this buyer that's, they low bandwidth, so they can go into remote environments, just very, very, very low uptime requirements. They're happy to have kind of grids that go down a lot as long as it's reflected in their power costs. And so they can come in and say, look, we'll buy any spare energy for a couple cents per kilowatt hour. And I think that it's just going to be increasingly normal to have that be part of energy generation, grid management. It's just a natural thing. And then also at that 4 to 8 year horizon, I think that the fact that portable capital is more of a thing, that you have this kind of portable capital in size that can move around the world, it basically rewards jurisdictions that respect capital and punishes jurisdictions that don't. So generally you'll see capital wants to flow out of the tighter jurisdictions and more towards the jurisdictions where capital wants to be. And this is a tool that just enables that. And I think that's a good incentive structure to exist in the world.
Michael, as far as AI in the future, as far as AI data centers, GPUs, and the energy and intensity that's associated with that and Bitcoin mining, is there some type of relationship there in 4 to 8 years? Or do you think that the cost of cheap energy is really polarizing for Bitcoin and it's not necessarily as tethered geographically to where maybe the large cities are, where the requests are for AI and data requests?
Well, I think that Bitcoin uses maybe 15 gigawatts of energy, and it's trending up. But I think that the Bitcoin energy fixation or narrative may have peaked or will peak in the next few years because Bitcoin is getting exponentially more efficient in using energy. Whereas if you look at AI, a lot of these hyperscalers are looking to scale up 60 gigawatts this year. And they're wanting to go to 600 gigawatts within the decade. So what's going to happen is they're going to inherit all of the energy FUD that we used to have. But you think that 10 gigawatts is a lot of power, but when someone decides they want 100 gigawatts, now it's real power. And they will actually throw all their lobbyists at that. And I actually think that it's pretty clear that civilization is headed toward using hundreds and then thousands of gigawatts of power. a lot of it for digital intelligence. Well, AI, I'll call digital intelligence. Some of it to secure digital money, you know, what Bitcoin is. But clearly, you know, the bigger idea is it seems inevitable that at some point, big tech and the hyperscalers are going to actually overturn or reverse the stigma for nuclear power. And you're actually going to see that Microsoft and Amazon and Apple will do for nuclear power what nobody else could do in 50 years, because they're going to need it to run their AI data centers. As for what I think about our relationship, I think if you look at Bitcoin companies today, you'd say, oh, here's 20 Bitcoin miners. Those are the big Bitcoin companies. But I actually think there'll be an emergent new class of Bitcoin companies, and there'll be applications on top of Bitcoin. Layer 2, Layer 3, Layer 4, Layer 5 applications. And they'll be doing things that were inconceivable last year that are profoundly important to the society. So I think there'll be a new generation of Bitcoin companies, and they may not actually be electrical energy intensive. I think they'll be digital energy intensive. I think they'll use Bitcoin on their balance sheets to do those things. And I think that Bitcoin's role is, we're critical to securing the internet against all of the bad actors with AI. Like if you want to actually watermark, timestamp, cryptographically sign messages and documents and content, you're going to need Bitcoin to do that as a system of truth. And so I think AI will drive demand for Bitcoin in that way. And then I also think that at some point, you know, the AIs are going, you could release an AI to run autonomously, and you're going to power it with digital energy, which is Bitcoin, right? If you want to create an AI version of yourself and have it live in the internet forever, you better give it some Bitcoin. And so I think there's going to be an interesting
awesome.
demand function there.
Yeah, that's amazing. All right. I want to take this opportunity to present you guys with a question that I think is a really powerful opportunity. And if you could look into the camera and talk to the world leaders, presidents of countries, and give them a 2-minute to 4-minute elevator pitch of why they need to take Bitcoin really seriously, what would that sound like?
I think there's the proactive way or the reactive way, and you want to take the proactive way. So you don't want to go through the phase where you're fighting it the whole time, you're losing battle against a decentralized thing that people want, and instead you want to embrace it proactively and say, look, we want our people to own Bitcoin. We want our institutions that are making Bitcoin companies to come and make jobs here and you know, create kind of capital here. So I think that there's like a time preference thing. So, you know, a lot of governments will look and say, oh, look, this is a threat to our currency, this is a threat to XYZ, and so their first instinct is to push back on it, but that's very short-term thinking. If they said, say, look, if we look out 5, 10, 15 years, do we want to be a hub that portable capital wants to come to, that people want to live, that people want to do business in, or do we not? And so I think that if they just look out longer, just to not go down that short-term approach of trying to make those capital controls, those firewalls, to try to make the frictions, because we've seen in multiple countries now, it just doesn't work. And it's just better to just get in front of that and just embrace it.
Michael?
He wants me to go.
I'm sorry. Larry, it's your mic time.
Happy to go next. Yeah, I think what I would say is, guys, we need to have a serious talk here, and the talk has to center around the fact that Keynes has driven us into a monetary cul-de-sac. And there's no way out. We're in a box canyon in a plane. We're going to crash into the wall. And the reason is that the Keynesian system is built on fractional reserve lending, which requires increasing debt consistently in order to generate any form of GDP growth. And we've gotten to the point at which the efficiency of that debt is extremely low, and so it's growing in a way that cannot be supported by the underlying GDP. And therefore, the two possible outcomes are sovereign debt collapse or very, very high rates of inflation, potentially hyperinflation. And so the money is badly broken, and we need to fix it. And we need to fix it in a fair way, as fair a manner as we can for everybody. And that is to return to some kind of a sound money standard. And Bitcoin, in my opinion, is the correct sound money standard. You read Jeff Booth's book, you'll understand why we need a deflationary currency rather than inflationary currency. Keynes was wrong. And really, money is all about matching efficiency. I mean, the amount of money saved and the amount of money invested should balance one another at what is set, it's the interest rate. That's classical economics. And that's really what we've gotten away from. The central banks control the interest rates, they manipulate it. We had 0% interest rates for years and years, and this is why we have this boom-bust cycle. It's creating enormous wealth inequality, and it's why you've got everybody screaming at each other and wondering what the hell is wrong. And what the hell is wrong is that the money is broken. So we need to fix the money, and if you want to be a true leader of your country, you need to educate all your people as to why we need to fix the money, how we're going to fix the money, and reset the currency so that we've got a system that's stable and sound for everybody.
I wouldn't even frame it economically. What I would say is you're responsible for a nation. The Romans were great because of their roads, and that gave them land power. And then the British Empire was great because they had ships and they could find longitude on the ocean, and they had ports, and they had good rivers and harbors, and that gave them sea power. And then at some point, we invented the airplane, and we had airports and aircraft, and that created air power. And you can't imagine a great nation without an airline. That's why the nations subsidize the airlines. And then along comes generators and coal and oil, and we create electrical power. And then there's nuclear reactors, and you have nuclear power. And then we create rockets, and the great nations launch rockets and satellites into space, and that gives you space power. And as you could see, your nation doesn't have a future if you don't have air power, space power, electrical power, land power, sea power. Even today, the United States is based on air power, sea power, space power, land power. And Bitcoin represents digital power. And if you want a future for your country, you need to harness digital power. It is the future. If I have an airplane, I can go around the earth in one day, and it's very visible to someone, right? If you have a ship, you can haul 1,000 tanks, and it's very visible. And when you have a road, you can move an army of 100,000 people. It's very visible. Well, what can I do with Bitcoin? I can move $100 billion in 30 minutes on Sunday afternoon from you to me and back again, and you can't do that with any other technology. And if you don't think that's important, then give me the 100 billion.
Go down the line, 1 minute each. Everybody here, everybody watching on YouTube or wherever they're streaming this, what's the most constructive thing? I hear this question all the time. I want to get involved. I want to do more than, like, what can I do to move this forward? What's the most constructive thing that everybody out there in the audience listening to this and watching this right now that they can do?
I think it's very local depending on where you are. So sometimes just buy it, just have it, just maybe gift a book to someone. I don't think it's the right strategy to go down and kind of push it down other people's throats, but basically be there, be willing to answer questions, research it for yourself so that you're ready to answer questions that come up. And then in certain places in the world, I'm really excited around these Bitcoin hubs that are building. Here in Madeira, for example, that's a Bitcoin hub. Bitcoin Beach was powerful enough that it inspired a nation to get more into it. We see multiple hubs in Africa, multiple hubs in Asia, multiple hubs in Latin America, multiple hubs in the United States, multiple football teams now embracing Bitcoin and holding Bitcoin on their balance sheet and getting involved. So basically, if you have a business or you have an organization, adding Bitcoin to it is one of the ways to kind of connect it and to make it better. So I think that basically whatever you're doing, figure out how you can do it in a way that is beneficial to network or just be a source of education to people around you and answer their questions.
cheerful, constructive Bitcoin advocacy.
He's looking right in my eyes.
I would just echo what Michael said. I think I've given away a lot of copies of Safe's book, and I just try and let it percolate and answer questions and support people.
All right. Give a hand to the panel here. What a thoughtful group, right?